So today I'm going to explain about auditing for stockholder security. So generally stockholder security includes ordinary shares, share premium and retained earnings. So the process involved in this cycle are issuance of stock, repurchases of stock and payment of dividend. Balances in the capital stock account changes when the company issues or repurchases stock. So transfer of ownership of shares from one shareholder to another shareholder does not affect the account balance. Retained earnings are normally increased by the earnings and decreased by the dividend payments. So the issuance of stock includes transactions such as sales of stock for cash, exchange of stock for asset, issuance of stock for stock splits, exchange of stock for services or convertible debt. So the second one is repurchases of stock. It is related to reacquisition of stock, which referred as treasury shocks and retirement of stocks. So the third one is payment of cash dividend. For payment of dividend, the payment of dividend includes payment of cash dividends or issuance of stock dividends. So moving forward to the source of document involved, the source of document involved for the equity is stock certificate book. A stock certificate book looks like a checkbook. It has perforated stubs for recording the number of shares, the owner's name, and the other identification and the date of issue. Actual unissued share certificate are attached to the stub like blank check, checkbook. The company should have a record of certificate that are outstanding in the possession of owners. So this is the one of the uh, certificate that we can find in stock certificate book. So moving forward to the journal entries and accounts involved. So the first one is to record the issuance of stock at par value. So the debit is cash, the credit is stock, common stock. So the second one is to record the declaration of cash dividend. So the debit is retained earning and the credit is dividend payable. So moving forward, to record the payment of cash dividends. First is the debit is cash payable and the credit is cash. And the fourth journal entries would be to record the owner's withdrawal for personal use. If the owner withdraw money for personal use, so the journal entry would be debit drawing, credit cash. So the last journal entries for the equity is to record the repurchases of stock. So the debit is treasury stock and the credit is cash. So moving forward to the flow chart for the cycle. So flow chart for the cycle. First, it starts with financial planning, where the company prepare financial planning by prepare the capital budget and cash flow forecast. And then the company will decide whether the company want to sell stock or borrow money. If the company decided to sell stock, it related to shareholders' equity such as capital stock, paid-in capital, and dividend. If the company wants to borrow money, it is related to long-term liability, where it can be bond, not payable, and interest expense. And then acquisition and expenditure cycle, where the company will purchase resources and increase the inventory and so on. And then production and payroll cycle, the company will convert the resources into product and service to sell to the customer. So the next one is revenue and collection cycle. So the product produced by the company will be delivered to the customer, and then the company will gain profit, and the company will invest the excess fund in marketable security and long-term investment and joint ventures and so on. So the internal control involved over equity is control activities. The control activities are policies and procedures which help ensure that management directives are carried out and implemented to address risk identified in the risk assessment process. So the first control activities is proper authorization of transaction by the board of directors and corporate officers. The board of directors must determine the number of shares to be issued and the price per share. If an installment plan of payment is used, the board must prescribe the terms. All changes in capital stock accounts should receive formal advance approval by the board of directors. So all authority for all dividend action rests with the directors. The declaration of dividend must specify not only the amount per share, but also the date of record and the day of payment. So, moreover, the stock split and changes in par or stated values of share require formal authorization by board. So the second one is segregation of duties in handling these transactions. So the duty should be segregated by the individual responsible for issuing, transferring, and cancelling stock certificates should not have any accounting responsibilities. So the second one is the individual responsible for maintaining the details of older records should be independent of maintenance of general ledger control accounts. So the third one is the individual responsible for maintaining the detailed stockholders record should not also process cash receipt or disbursement. Appropriate segregation of duty should be established among payment and recording of dividend payment. So corporation fully achieves the internal control concept of separation duties by placing the responsibility for handling capital stock certificate in separate and independent organization. For example, the internal control is better when the services of an independent stock registrar and stock transfer agent is utilized because the bank or trust companies acting in these capacities will have the experience and the trained personnel to perform the work in an expert manner. So that's why the internal control can be fully achieved by the separation of duties by placing the responsibility for handling capital stock certificate in separate and independent organization. So the third control activity involved is maintenance of adequate records. So the board of directors should designate officers who are authorized to sign stock certificates, maintain records of stockholders, maintain custody of uninsured certificates, sign dividend check. The certificate should be issued in numerical sequence and not signed or countersigned until the time of issuance. A transfer journal used to record transfer of shares between shareholders. The stockholder ledger provides a separate record for each stockholders. The record may be used in compiling the list of dividend checks or for any other communication with the shareholders. So it is very important for the company to maintain the, uh, the to maintain the shareholders record. So moving forward to the risk area in the cycle, the first risk is the inherent risk. So the inherent risk is the auditor's assessment of the likelihood of material misstatement in an account balance before considering the effectiveness of internal control. So inherent risk most likely to occur when transactions are complex. So in this case, the inherent risk occur due to fraud, the equity where the equity is intentionally overstated. Second factor of inherent risk may occur is due to the errors where the equity is misclassified. So moving forward to control risk related to the equity. So the first control risk is created with completeness accession, where some issue stock is not recorded, treasury stock repurchases are not recorded, declared dividend are not recorded, prior period error correction are not appropriately recorded. So the internal control activities that can be taken by the company is management regularly obtain register of issued stock from third party register and compare with the recorded capital stock to avoid the control risk. So the second one, the company can require authorization of board of directors for treasury stock repurchases, and the management should periodically review equity account and hire qualified personnel and review their work. And the second control risk is related with presentation and disclosure accession, where the exercises of stock option are not allocated properly between capital stock accounts. So the internal control activity that can be taken by the company is hire qualified accounting staff and review their work. So the important accession for the equity, the first one is occurrence. The occurrence accession relate to whether all recorded transactions and events have occurred or not. So the occurrence is sometimes also referred as validity. So failure to meet this accession, the occurrence accession, will result in an overstatement in the equity account. So the substantive test for to meet the accession, this occurrence accession is to verify that the stock and dividend transaction are valid and comply with the corporate charter The second one is trace and transfer of shares between stockholders to the stock register and stock certificate book. And then the trace every stock or dividend transaction of GBH Sandrian Berhad complies with the corporate charter or any regulatory requirement that affect the entity. The fourth one is examine any cancer stock certificate. So the next one is accuracy. So the accuracy assessment address whether amounts and other data related to the recorded transaction and even have been recorded appropriately or not. So the substantive test to meet the accession, the accuracy accession, is to verify all stocks and dividend transactions have been properly posted and summarized in the accounting records and examine stockholders record with the number of shares and shares outstanding. So the third one is authorization. So authorization relate to whether all the transactions have been properly authorized or not. So the substantive test for authorization is verify that the stock and dividend transaction have been properly approved and examine the board of directors meetings of GBH Sandra Berhad for proper authorization. So the fourth important accession for equity is completeness. The accession about completeness addresses whether all the equity that should have been included in the financial statement have been included or not. So the substantive test to meet the completeness accession is confirm the information relevant to the annual amount, account for and inspect any unissued stock certificate in the stock certificate book, put the shares outstanding in the stock register and stock certificate book and agree them to the total shares outstanding in the general ledger, inspect document for evidence that management periodically reviews stock registers, and inspect board of director meetings of GBH Sandan Berhad for evidence of approval of treasury share repurchases. So the fourth one is valuation. So valuation address whether the equity included in the financial statement are appropriate amount and any resulting valuation as an adjustment are appropriately recorded or not. So the substantive test to meet the valuation accession is to verify that the stock and dividend transaction of GBA Sindran Berhad have been properly valued and recompute the recording of stock and dividend transaction. So moving forward to the audit procedure for the cycle. The first one is inspection of records or document. So inspection of record or document consists of examining internal or external record for documents that are in paper form, electronic form or other media. Regular check or record or document by auditor will avoid mismatch being happen. So if the auditor is concerned about the entity's control over the dividend, the auditor may compare the payee name and amount on the individual cancel check with the stock register or the stock certificate book. The auditor also can review the entity's compliance with any agreement that restrict the payment of dividend. And then the procedure can be the inspection of document or record procedure. The audit procedure can be done by examining article of incorporation by laws and meeting of GBA Sendirian Berhad for provision related to capital stock and account for all proceeds from stock issues and trace the transaction record in the current year to the board of directors meeting and determine that the compliance with restriction and preference pertaining to capital stock and disclosures are appropriate or not. So for example, the auditor can obtain assurance on the occurrence of capital stocks transaction by tracing the transaction recorded in the current year to the board of directors meeting. So the auditor begins the audit of retained earning by obtaining a schedule of the account activity for the period, and the beginning balance is agreed to the prior year's working paper and financial statement. So the net income or loss can be traced to the income statement, and the amount for any cash or stock dividend can be verified as we refer to the income statement. So if there are any prior period adjustment, the auditor must be certain that the transaction satisfy the requirements of the relevant accounting standard. So any new appropriation or changes in existing appropriations will be traced to the relevant contractual agreement. So the second audit procedure is inquiry. So inquiry consists of seeking information of knowledgeable person, both financial and non-financial, inside or outside the entity. For example, the auditor can obtain an understanding of internal control over capital stock transaction of GBA Sendirian Berhad. For example, the auditor should acquire an understanding of client's procedure of for authorizing, executing, and recording capital stock transactions. So moving forward to the third procedure, which is external confirmation. So the external confirmation represent audit evidence obtained by the auditor as a direct written response to the auditor from a third party, I mean the confirming party in paper form or by electronic or other media. So the number of shares issued and outstanding on the balance sheet date may be confirmed by the direct communication with the independent registrar and stock transfer agent. So the confirmation request should be written by the client on the client letterhead, but it should be mailed by the auditor. So confirmation reply should be sent directly to the auditor, not to the client. All the information contained in this reply should be traced to the corporate record. So it is essential that the general ledger controlling accounts agree with the amount of stock issued as reported by the independent registrar and stock agent. For example, the auditor can confirm shares outstanding with the independent registrar and stock transfer agent. When an independent registrar are used by the entity, the auditor confirmed the total number of shares outstanding at the end of the period. If the number of shares listed as outstanding on the confirmation reconciled to the general ledger capital account, the auditor has evident that the total number of shares outstanding at the end of period is correct. So the fourth audit procedure is recalculation. Recalculation consists of checking the mathematical accuracy of document or records. So recalculation can be performed manually or using information technology. So for example, all the dividends that are declared and paid will be audited because of the concern with violation of corporate bylaw or debt convents. When the entity uses an independent dividend dispersing agent, the audit can confirm the amount of dispersed to the agent by entity. The amount is agreed with the amount authorized by the board of directors. So the auditor can recompute the dividend amount by multiplying the number of shares outstanding on the record date by the amount per share dividend approved by the board of directors. So the amount should be agreed to the amount dispersed to the shareholders and accurate at the year.
Okay, hi. My name is Yao Qingxi, and now it's my turn to present about the long-term liability cycle. Okay, as we all know, long-term liability is the types of liability which require the company to pay off all the debt more than 1 year, for more than 1 year. Okay, here I already put in like three processes which is involved in this cycle. Okay, normally when a company issue long-term liability, they will choose to issue these three types of financial instrument. The first one is debenture, bond, and notes payable. Okay, after they choose which one to issue, and then they will need to pay off the principal and also the interest expenses. Okay, for example, after 3 to 4 years, after they pay off all the principal and also the interest expenses, they will receive the return debt instrument from the lenders. Okay. As we discussed just now, like we have like three types of financial instrument that we can issue, and so here I already listed like three documents that usually being used by the company to when issuing the long-term liabilities. Okay, the first one is the venture agreement. Okay, the venture agreement is a document that acknowledges and also contains the terms of loan. Okay, normally when a company issue debenture, they will need to have um, a guaranteed, for example, like they offer, it's like mortgage, and then they will guarantee it on an asset, for example, and then if the company default, meaning that fail to pay off the debenture, the lender they can charge over the companies property or asset. Okay, the second document will be indenture. Okay, indenture, it's a legal and binding contract, and it usually associated with bond agreement. Bond agreement, real estate, or bankruptcy. But here we focus on bond agreement. Okay, inside an indenture, it normally will have the maturity date, timing of interest payment, method of interest calculation, callability, and convertible features if applicable. Meaning that normally like a company, when they issue a bond, they maybe state that the bond are convertible into shares, for example. So that's why all these terms will appear inside the contract, inside indenture. Okay, and then the last one will be promissory note. Promissory note, the company use it, the company issue it when they wanted to get financing from a source other than bank, like maybe another financial institution. Okay, and it is a financial instrument that contains a written promise from the lender, from the borrower, which is the company, to pay another party, the lender. And then they will pay a sum of money either on demand, which is now, or at a specific future date. And I already provide an example here of the promissory note. Okay, now we continue with the journal entries and accounts involved. Okay, the first journal entry here, it indicates that when the company first take the long-term debt, and then they will need to record it like this one. They will firstly debit the cash and also credit the notes payable. When they debit the cash, meaning that they already received the money, and then when they credited the notes payable, meaning that there are increase in the liability. Okay. After they have the money, then they need to pay off. They need to do payments. Okay. When they do the payments, they need to debit the notes payable and also the interest expenses and credited the cash. Okay. For notes payable, they need to debit it, meaning that it will indicate the reduce in notes payable, the reduce in liabilities, and increase in expenses because we need to pay off interest and we need to use money to pay off these two accounts. Okay. Okay. The third one is to record accruals of interest. When a company doesn't make the payment on time, they will have accrual of interest. Okay. To record it, we need to debit the interest expense and credit the interest payable. Okay. The last journal entries is to record the final repayment of note and interest at maturity. Okay. They need to debit three accounts here, which is interest payable, interest expense, and also notes payable. Okay. Firstly, they need to debit the interest payable because it indicates that the company already paid the interest payable and this account will be set off. Okay, and then the second one is interest expense and notes payable. Like it's the same with the journal entries that I explained just now. The second one, and it is to indicate that the company have incurred some expenses and also they need to reduce the notes payable. And all these they will need to pay with cash. That's why the cash is being credited. Um, Now I would like to present about the internal controls involved. As we all know, internal controls have like 5 main components. And for this cycle, I will focus more on the control activities. Okay, proper authorization of transaction by the board of directors and corporate officers. Okay, as we normally know is that for the long-term liability, it involves a high sum of liability. Also, the issuance, sale, purchase of debentures or bonds, and if we want to obtain the large bank loan, it will be discussed by the highest level of the company. And the authorization by the board of directors, it will include the review and approval of such matter, such as the choice of bank or trustee, which bank to choose, which independent trustee that we will choose, and the type of security, which one the company will issue, and also how the registration will ongoing. Okay, we as an auditor, we must review the minutes of meeting, so that we can so that we can know for the authorization of significant transaction, including the issuance of bond. Meaning that we need to know about the authorization, whether it really occurs, whether they really follow the internal control. And then in case of absent tangible evidence, in case we cannot find any tangible evidence, we must make an inquiry at the highest level. It is to ensure that these major transactions which involve have been approved. Approval is very important. Now we will continue on the adequate record of transaction. Okay, although the transaction in this cycle are infrequent, but they are very greatly in type, and they also involve a large amount of money. Therefore, the control on over the recording, over the recording of the transaction must be implemented. And then the auditor can firstly should test the competency of the individuals who are making those journal entries, those transactions. And the auditor can begin with asking the management about the qualification of the employees who are responsible for the record keeping. And employee turnover is very significant. It's very significant in this cycle. It is because if the employment turnover is very high, meaning that and some material misstatement happens, meaning that the auditor will face difficult in finding the people who are responsible in recording the transaction. Then they don't, meaning that the auditor don't have anyone to ask, and they don't know who are responsible towards those transactions. Mm, Next is about the use of an independent trustee. What is independent trustee? Okay, independent trustee is an external external party that is being hired by the company to manage the financial instrument of the company, the long-term liability, such as debenture or bond, right? Okay, and then they will be responsible on the registration, transfer, and also the payment of the bond. They act as an agent. They act like an agent for companies who have enough resources and money to hire them. Okay. Normally, an independent trustee will comes from a large bank. Large bank will offer this kind of services to companies that wants to issue bond or debenture. Okay. Here I list down is the trustee is charged with the protection of the creditor's interest, meaning that they make sure that the main company will always pay the interest on time, and they will also and the trustee will also monitor the issuing of the company's compliance with the provisions in the indenture. Um, from here, we can understand that the trustee will need to monitor whether the company complies all the terms that they already stated inside the agreement. Okay. How internal control can be strengthened by this action, meaning that by hiring the independent trustee. Okay. It can be strengthened by the fact that the trustee, they don't have access towards the company's accounting records. Um, from here, we can say that the trustee are responsible in issuing monthly statement only, but they don't have power in um, in accessing the original accounting records of the main company. And also the fact that the trustee comes from large financial institution, so therefore they will be more reliable and they will be more responsible towards their job, due to um, due to the company can always sue, can always make a legal can always make a legal action towards the company if they fail to follow their fiduciary duties. We continue with the risk area in the cycle. Risk area can be divided into two. The first one is control risk and the second one is inherent risk. In this slide, we will talk about the control risk related to long-term liabilities. What is control risk? Control risk meaning that it really related with the internal control of a company. If the control risk is malfunctioning, then if the internal control is malfunctioning, then the control risk will be high and also vice versa. In here, in this slide, I already divide the control risk into 4 different categories with the relevant assertions. And I also list down the internal control activity that they can do, meaning that the management can do to mitigate or reduce the risk. Okay, the first one is about the occurrence or existence. The control risk that can happen is that the fully paid notes are not properly removed from schedule of long-term debt, meaning that the payment already finished, but it is not being removed from the schedule of long-term debt. It's still there, the recording still there, as if the transaction still happens. Okay, and what can the management do is the manager authorize all issuance and ending payment of long-term notes and bonds. The managers need to authorize and also monitor all the transaction. The second one will be completeness. Okay. Control risks that relate with completeness is the management fails to record capital lease obligation. So what they can do is to separate the duties of authorization of lease agreement of which lease agreements from accounting for lease agreement. They need to separate between the authorization and also who is the person who will record all the transaction. This one, it's like the segregation of duties. And continue with valuation. If the sometimes the amortization of long-term debt is calculated incorrectly, and therefore the company can choose to hire qualified personnel and review their work. Okay, last one is about the presentation and disclosure, how they present it in the financial statement. Okay, what can go wrong here is that the management fails to reclassify the current portion of long-term debt. The management fails to disclose the future minimum required debt payments, and also the violations of restrictive loan convenience are not properly disclosed. Convenience here meaning the agreement. And what they can do here to overcome all this is that to ensure the active oversight by independent financial experts from the audit committee. Next is about the inherent risk related to long-term liability. What is inherent risk? Inherent risk meaning that it's the risk that comes along with the industry the company involves in. For example, maybe like competition from their competitors, and the company cannot run away from this risk, cannot cannot control this risk. Okay, in here, I already divide the inherent risk into 2 different categories. Okay, the first one is that the inherent risk for notes and bonds would normally be assessed to low to moderate. This is because of the volume of transactions are low, which is infrequent, and also the accounting is not complex. And the entity also oftenly receive third-party statement or amortization schedules, for example, from their independent trustee. Okay, However, the amount are usually large. The amount are usually large, although infrequent. Hence, the understatement of that, whether due to error or fraud, is considered to be a major potential inherent risk, meaning that it's a debt, right? And then the company, almost all of the company have tendency to understate their debt. Okay. Next, the management will always concern with how the company can obtain the capital, the way the company obtain the capital. It must be in an effective and also efficient manner. If the company doesn't comply with the agreement, it will become a problem not only for the management but also the auditors, because non-compliance may affect the classification of that and also the related disclosure that need to be made by the company. Important assertion for the cycle. For the assertion, I already divided into two big categories. The first one will be assertion regarding the classes of transaction, which will relate with the profit or loss statement, and also assertion for account balances, which will relate with the balance sheet of the company. Okay, the first assertion is about the occurrence. How the auditor can do a task regarding this assertion is by examining the copies of new notes or bond agreements, and also examine the minute meeting of the board of director. As I mentioned in the slides before, the auditor need to examine the minutes of meeting to really sure about the authorization and also occurrence. Okay, next is about the completeness. The auditor can test the completeness by trace large cash receipt and payment from the source of documents to the general ledger. The auditor can also review the notes paid or renewed after the balance sheet date to determine if there are unrecorded liabilities at year end. For the authorization, the auditor need to examine the minutes of meeting, just now I already mentioned. And for the accuracy, the auditor can test a sample of receipts and payment. Okay, well, for cutoff, we all know that cutoff is for to determine whether the transaction is recorded in the proper period. So how the auditor can test it is by review the debt activity for a few days before and after year end to determine whether the transactions are recorded in the proper period. Okay, last but not least is about the classification. Okay, classification, the auditor can test it by examining the due dates on notes or bonds for proper classification between current and long-term debt. As we all know, current and long-term debt will be classified into different categories as they are different in nature. Okay, next is about the assertion for account balances. Okay, for account balances, we only have 4 here. Okay, the first one is existence. By confirming notes or bonds directly with creditors, the auditor can know whether the long-term debt really exists. And next is about the completeness. Okay, completeness is much more same as the transaction. Okay, the transaction part, the auditor can know it by obtain an analysis of notes payable, bond payable, and accrued interest payable. They need to put the schedule and agree totals to the general ledger. This is like audit procedure they do is I think it's regarding the re-performance, okay? And they can obtain a standard bank confirmation that requires specific information on notes from bank. This is about, I think it's related with the external confirmation, okay? And for the rights and obligation, the auditor can examine the copies of notes and bond agreement. And lastly is about the valuation and allocation. By confirming the outstanding balance for notes or bonds and the last date on which interest has been paid, and also verify the computation of the amortization of premium or discount. The auditor can know whether the company value the client value and allocate the amount of the long-term liability correctly. Next is about the relevant audit procedures for the cycle. As you all know, audit procedure have close relation with the assertion of the company. Like audit procedure are like how the auditors can obtain their evidences from this audit procedure. Okay, for this audit procedure, I already divided into 4 main audit procedure, and that I think is the main. And okay, the first one is about the analytical procedure. Okay, analytical procedure, the auditor can do it by obtain or prepare analysis of debt accounts and related interest, premium, and discount accounts. They also can perform analytical procedure to test the overall reasonableness of interest-bearing debt and interest expense. And they can evaluate whether the debt provisions have been met. Okay, next for scanning, the auditor can review the notes payable paid or renew after the balance sheet date, like scanning, like go through it and see whether they have like significant error, significant amount. Okay, and next, okay, it's about the external confirmation. Just now I also already mentioned about what the company can do to what the auditor can do to get the external confirmation. Okay, here it's about the confirm that with payees or appropriate third parties such as just now banks, and also they can send confirmation letters to financial institutions to obtain information about the financing agreements. Okay, and then last, it's about the inspection of documents or record. The company can examine copies of notes payable and supporting documents, watch the borrowing and repayment transaction to supporting documents, or trace the authority for issuance of debt to the corporate minutes, meaning that they need to like see the minutes of meetings. And lastly, is to evaluate the proper financial statement presentation and disclosure of that and related transaction. This is about this disclosure is related. It have close relation with the classification that the that the company will do.
Question for long-term liability and equity. So an audit firm is engaged in the audit of financial statement of GBS and Berhad. The sections of shareholders' equity and long-term liabilities of GBS statement of financial position are as follows. So here is the shareholders' equity and long-term liabilities. So the required is for the purpose of the audit of financial statement of GBS and Berhad, what are the procedures should the auditor employ in examining the shareholders' equity and long-term liability section? Explain two procedures for each section. So answer for the question, audit procedure that GBS and Berhad should employ in examining the shareholders' equity are inspection of document or records. So the inspection of document or record can be done by examining articles of incorporation bylaws and minutes for provision of GBS and Berhad related to capital stock. The second one, account for all proceeds from the stock issues and determining that compliance with restriction and preference pertaining to capital stock and disclosure of GBH and Berhad are appropriate or not, and trace the transaction recorded in the current year to the board of director minutes of GBH and Berhad. So the second procedure is recalculation, where the auditor can recompute the recording of the stock and dividend transaction of GBS Sindra Berhad. So moving forward to the audit procedure that GBS Sindra Berhad should employ in examining the long-term liabilities are analytical procedure, where the auditor obtain or prepare analysis of debt account and related interest premium and discount accounts, and the auditor can perform analytical procedure to test the overall reasonableness of interest-bearing debt and interest expense, and the auditor also can evaluate whether debt provision of GBH and Berhad have met or not. The second one is inspection of document and on records, where the auditor can examine copies of not payable and supporting document of GBS in Berhad, and the auditor can vouch borrowing and repayment transaction to the supporting documents and trace authority for the issuance of debt to the corporate minutes. And lastly, the auditor can evaluate proper financial statement presentation and disclosure of debt related to the transaction of GPS in Berhad. Thank you.
Okay, so for the last part, I will talk about the answers for the question that is provided. Okay, the question is about here. The question is about what are the audit procedures for each section, and also the management assertion that it will fulfill. Okay, since that our question divided into two different cycle, which is for equity cycle and also long-term liability, and I will talk about for the long-term liability. Okay, the audit procedure that the company, which is GBH Shandiam Berhad, should employ in examining long-term liabilities are two. The first one is analytical procedure, and the second one will be inspection of documents and record. As we know, the magical word for analytical procedure is compare. So by the company can compare compare the statement from maybe compare the data from last year to this year, or compare it with another industry. Okay, the auditor need to, before comparing, the auditor need to obtain or prepare the analysis of debt accounts and related interest, premium, and discount accounts, and perform the analytical procedure to test the overall reasonableness of interest-bearing debt and interest expense, and evaluate whether the debt provisions have been met. And for the um, inspection of documents and records is very related um, with the tracing or vouching of documents. Okay. From here, we can see that the auditor need to examine the copies of notes payable and supporting documents, vouch, okay, just like I already mentioned, vouching, tracing, and also evaluate the proper financial statement, presentation, and disclosure of that and related transaction. Okay, for the management assertion that the audit procedure can fulfill are about the valuation. Okay, valuation is related with the analytical procedure, and for the completeness, it really relates with the inspection of documents or record. For the valuation, the auditor need to examine the new debt agreement to ensure that they were recorded in the proper value, and confirm and reconfirm the outstanding balances for notes or bond, and the last date on which interest has been paid. They can confirm it by doing inquiry, or external confirmation. And lastly is they need to verify the computation of the amortization of premium or discount. Okay. Last but not least is about the completeness. How the completeness can be obtained by the completeness assertion can be tested by the auditor by obtain an analysis of notes payable, bond payable, and accrued interest payable. They need to put the schedule and agree the totals to general ledger. And they also can obtain a standard bank confirmation that requests specific information on notes from bank. And they also can inquiry ask the management regarding the existence of off-balance sheet activities, and any of it if applicable, if really exists. And also lastly is about review the board meeting minutes for that related activity. Okay, that's all from me. Thank you.